Welcome to Global Business Insights, where we analyze latest headlines and data relevant to business. First, we will discuss some macroeconomic data out today from Europe and the United States, including the latest United States Energy Information Administration data release of crude oil inventory stocks. And in Hong Kong, following a budget announcement to do away with property curbs and encourage more investment, property stocks firmed up. The Hang Seng still closed down 0.2%, though the property index was up nearly 2%. Apple has cancelled its secretive electric car project in a shift to focus on artificial intelligence. Can Apple catch up, as it is late to the race to join leaders in the generative artificial intelligence race? Euro area economic confidence weakened unexpectedly at a 3-month low in February, implying the bloc may be in a recession. The economic sentiment index fell to 95.4 from revised 96.1 in the previous month. The score was forecast to rise to 96.7, and at minus 9.5, the industrial confidence indicator also hit the lowest in 6 months. In the United States, the economy expanded an annualized 3.2% in Q4 2023, slightly below 3.3% in the earlier estimate, and it came after a 4.9% GDP growth rate in the third quarter. The downward revision was due to private inventories reducing the earlier growth estimate, but also consumer spending was revised higher at 3% compared to 2.8% in the earlier estimate. For the full year 2023, U.S. economy grew 2.5% compared to 1.9% in 2022. The weekly Energy Information Administration data, EIA, crude oil stockpiles report of the change in the number of barrels in stock of crude oil and its derivatives showed U.S. inventory of crude last week up by 4.19 barrels from the previous week, which was also higher than 2.7 million expected and 3.5 million the previous week. In an earlier print, we saw U.S. crude stocks up by 8.4 million barrels last week, this time according to the American Petroleum Institute data. Inventories have been rising in the U.S. as the rate at which refineries process crude into finished product has of late been lower, putting a downward pressure on prices. Still in the U.S., we saw mortgage applications down by 5.6% on the week ending February 23rd, extending the year high 10.6% plunge in the previous period to the lowest since November 2023. And at a budget speech, Hong Kong cancelled property stamp duties for residential transactions, saying they are no longer necessary. Residential flat prices fell 7%. The non-residential property market was also somewhat quiet. The speech also stated that much more needs to be done to strengthen momentum of economic recovery, with several organizations like the Hong Kong Office for Attracting Strategic Enterprises all working together to reach out to strategic enterprises and to proactively attract and help high value-added technology industries and enterprises to come to Hong Kong. Also, there are new initiatives to attract talent and help new talent settle in Hong Kong. A Global Talent Summit and Talent Development Conference will hold in May to promote Hong Kong's advantages as an international talent hub and encourage the inflow of talent. Also, to boost tourism, over $120 million was allocated to the stagnating segment, including monthly fireworks and drone shows to get more visitors into the country. Hong Kong expects to see a 2.5 to 3.5% growth in its economy this year, following a worse than expected 3.2% expansion in 2023. The key thing here is that getting economic growth in the near to medium term is going to be no tea party, and policymakers all over the world are shredding old statutes and rethinking all the factors needed to attract business and talent, investing heavily to get carefully identified strategic enterprises to come in, and of course shaving off costs as incentives to investors, either in taxes or in duties. Investors now are being wooed as power shifts away from government and more to holders of vast capital and liquidity, who now expect lavish incentives to move that capital into a country. Definitely, the paradigm shift is compelling. Apple is reportedly winding down its team working on electric cars, called the Special Projects Group, signaling an end to an ambition to build the ultimate electric vehicle. This is as more resources are needed to strengthen its generative artificial intelligence team. The EV project was never a top priority, as Apple is still seeking for that new big idea that would rival the emergence of the iPhone. Apple is also exploring health technologies, especially for the Apple Watch, and last month released its first virtual reality headset, the Vision Pro. We haven't seen the numbers, but early indications are that the pricing may be too high for this to really catch on. Revenue growth has been challenged as the 2% rise in the last quarter snapped a 4-quarter streak of falling sales, unlike other big technology players that have been doing consistently better. Xiaomi, that's a maker of Android smartphones, announced a new electric vehicle this week, and Foxconn, Apple's main manufacturing partner, said last year it will build electric vehicles. The appetite for EV is there. There is a bit of catch-up to do in infrastructure. Governments may be somewhat weary of pushing expensive incentives at a time of increased competition for what to do with slim fiscal space. Tesla said its sales growth would slow this year compared with 2023. General Motors and Ford Motors are also manufacturing fewer EVs and more hybrid vehicles. Still, it's a very compelling technology, but not catching on as quickly commercially as had been touted. The big new thing could be an AI-powered device like no other, and Apple has the budget to explore the possibilities, and generative artificial intelligence clearly needs a lot of cash. But Apple is a big spender on R&D. The overall R&D spend last year was a massive $30 billion, which was up 14% from the previous year. I suspect we will still see more strategic acquisitions and alliances as the fat cap giants jostle to get faster results in this new space, even as regulators watch developments to avoid emergence of yet another super giant stifling fair competition. The pressure is now on Apple to get its AI developments right, especially as they may be late to the party in a space where the expectations are very high, and others have been already touting strong AI credentials. Apple has not commented on the shift. Still, its shares has lagged behind the Magnificent Seven. Apple stock has fallen 5% year to date. Now, as we speak, Apple shares down 0.93%. As we close, we look at Boeing, where executives have been given 90 days to develop a plan to fix what the U.S. Federal Aviation Administration have described as systemic quality control issues. The demand came after Boeing Chief Executive David Calhoun and his senior safety team met FAA Administrator Mike Whitaker yesterday. Boeing shares up 2.87. It's about 17:15 GMT. Walt Disney has agreed an $8.5 billion deal to merge its India business with Mukesh Ambani's Reliance Industries conglomerate, reducing the entertainment group's exposure to what has been a loss-making venture in India. Walt Disney shares up 1.2% also as we speak. And Bitcoin is still surging up, breaking above 60,000 as enthusiasm for the world's largest cryptocurrency reached a level last seen during the 2021 boom. The price of Bitcoin is up 43% so far this year, mainly due to excitement over spot Bitcoin exchange traded funds that commenced trading in January. Bitcoin is now 63,391, up 10.88%, also as we speak about 17:15 GMT. And on global stocks, European stocks were mostly lower as traders were cautiously looking at the latest data and perhaps seeking for clearer direction. If you look at Europe as we speak, the stocks, Europe 50 up 0.19%, FTSE 250 up 0.19% as well, FTSE 100 down 0.02% as they closed this evening. DAX Germany up 0.76%, CAC up 0.23%. So you could say that mostly up. Looking at Asia Pacific stocks, Nikkei 225 closed down 0.12%. Hang Seng closed also down. That's the Hong Kong index, down 0.49%. We did say the property index there was up. Shanghai Composite, that's the Chinese index, closed down 0.26%. The South Korean Kospi, however, closed up 0.59%. And Wall Street stocks opened lower today as investors wait for the inflation data due tomorrow. Nasdaq down 0.3%, Dow 30 also down 0.18%, S&P 500 also down 0.1%. The personal consumption expenditure index data could influence the timing of the Federal Reserve's decision on when to cut interest rates, especially if it presents an upward surprise. The inflation gauge, that's the core PCE, is expected to show that prices rose 0.4% month on month in January, up from 0.2% in December. Also, if we look at some of the stocks we've been monitoring, Disney is up 1.18%. Bitcoin is 63,900, now up 11.79%. If you look at Brent crude, it's down 0.43%. It's $3.29. Well, that's it from me on Global Business Insights. If you enjoyed the program, please share and kindly follow on Facebook and LinkedIn. Subscribe on YouTube and X. Thank you very much for watching. This is Ode Shosani. Bye-bye.